Felix here. In this video, I'm going to share with you every single trade I made in the month of July 2024, the winners, the losers, and I'll show you that overall, we made about a 30% return on our portfolio that month for my teaching portfolio. And some of you might say, I don't believe it, it must be a scam. Well, I'm going to share with you not just the tracker, I'm going to share with you the actual trades. You are very welcome to take a screenshot of this. These are all the trades I made in July, and you can run your own calculations. And if you're still in that mindset, let me answer you with a quote from Warren Buffett, which goes, "The rich get richer because the poor think everything is a scam." And I always encourage people to ask questions, be open, though, at the same time to new ideas. So you want to do your due diligence, but you need to be open to new ideas and that there is a possibility that this could actually be real. And I'm going to share with you my trades that some are the sort of beginner trades, some are more advanced trades, just like everything I've done. And let's get started here. So July shows every single trade here that we've done, the top here, the total, and we're going to literally walk through these. Now, the $0 trades just means I opened a trade. I'm not going to look at that. I also only look at the trades that we close, because that means we either made a profit or we made a loss, right? So that's the way I do it. And if you're thinking, oh, but you must be hiding something in your open positions that are all terrible, here are all the open positions. Okay, so there we are. Now, let me share with you what we did on Wednesday the 3rd. We made a lot of money on Wednesday the 3rd, and it was a Tesla trade. And we closed it on July 3rd. How did that work? Well, let me show you on a chart here in Trade Vision. That's the software I use to find my trades. That's the software I use to decide which trade I do. It's the indicators I use and everything else. So you might want to get yourself a free trial to that. So what did we do here? Well, I'm going to put a line, like a vertical line in the day we opened this. We opened it here, and then I closed it there. Oops, can I get 2 lines? Are we allowed 2 lines, please? There we go. Yes. So very short period of time. Now, why the heck did I enter the trade? Well, I just thought that, well, we had a very beautiful big green day there. I think it was finally the day we broke over the recent resistance. Our indicator here in the background started to go green. I know I'm using a red pen here, but you get the idea. It's been green along the whole way. And then I exited here. Why the heck did I exit? Felix, you left money on the table. It's true. I always do. I always enter too late and I always exit too early. And that's actually the strategy, because you never know when it's the top of the market, but you can start to see some signs as in I'm making money. But the real reason was that at the time there was a big resistance line here at $240. 240 was the resistance. And I could see that much like right now, I can see there is a $260 resistance right here, that green line there. And that's just what Trade Vision tells me. And that's basically trade open positions. So I went in here, I exited there, and we made money. We made a very nice chunk of money on a trade. And that's ultimately what it's all about, right? It's about making money. So that was that first trade there. I simply bought a call option into very, very far out, which I do sometimes. It's a little bit like setting up a share position, but you just need a lot less money for it. And we made a very nice return on that trade, which is nice to see. The next day, where we actually, okay, here one trade, no profit. So let's go into Monday the 8th, which is this here. And we lost some money on a SPY trade. Actually, let me just click on that again here. So it says 5 trades, but yeah, the actual loss-making trade was SPY. So I opened 4 other trades, but the one that lost me $1,200 was a SPY trade, which, let me just find it, 530, 535. So I opened that on the 2nd of July. So I'm going to open the SPY chart here for you. So I entered the trade. Again, let me put a little vertical line in here. Okay, there even. And the trade was positioned at somewhere around this horizontal blue line there. So I had quite a lot of wiggle room to drop lower and I could still make money, but ultimately I wanted the stock to go up. It was a bullish trade. So how did we lose money on that? Let's have a look. So what I did is I didn't just set up one trade. Let me just see if I can remove that. May I? Oh, it's back. There it is. I set up another trade as well, which was around 560. which was here. So I basically set up a zone, and this is sort of called an iron condor as a trade. So I started here. That was the start. And then I created a zone where I would make money if we stayed within this and this. Now, what you'll notice is that we went up a lot. So my top trade here, my bearish trade up here at 560 was starting to make me sad, starting to make me lose money. So I suppose I closed that out. I did. And then I also closed out the put side of that trade at the same time. Okay, because I just wanted to close the whole thing overall. And that was actually a good call, because otherwise, as it went down the next few days, I would have also lost money down here at the bottom. So essentially, I thought the market was going to go sideways. The market decided to really rally up, and therefore I overall lost some money and voluntarily cut my losses so that I would have the ability to live another day. So let's go back to July here. So that was the Monday on the 8th. Now the 9th, okay, on the 9th, 2 trades, and we lost a little bit of money. Lost a little bit of money on the Costco trade here. Did I just close that by accident? I think I did. So $130 down on Costco and a little bit of money there on a SPY trade. And Costco trade was set up on the 2nd. That's a bull put at 42. So let me open that for you here. Yeah, it was there, and it was approximately there. But I wanted it to go up, right? I was basically saying, please go up. We were bullish. And what does the stock do the day after? It gaps down. And I suspect that's when I exited. Did I? I exited on the 9th. Okay, I held on to that thing far too long. I should have gotten out far earlier. So I got out down here. Now, the loss was small, thankfully, $130. Probably because I had this great big room here to be wrong, right? So my trade would make money anywhere above that yellow horizontal line here. We'd make money. But if you head down like that, there's a concern here that you might get down a lot lower, as we actually ultimately did over here. So actually, I should have exited that on the next day. I probably just thought, it'll be fine. We've got so much room till our safety zone down here. And generally speaking, that sort of thought is a bad idea. Stick to the rules, Felix, he says, talking to himself. Slightly concerning, I know. Okay, the next trade was, let's go back here to the overview. Oh yeah, the same day we also did a small, or the next day. Here we made $56 on a SPY trade, just a very, very small trade. I don't think we need to go into that. I don't think it's particularly interesting, but it's sort of the bread and butter of what we do. If in doubt, I always say trade SPY. Wednesday, another little SPY trade there. Okay, $111. Let's have a look at that then. Opened that on the 8th and closed it on the 10th after making a bunch of sort of adjustments and things, I think. Are these adjustments? I know we just got into that position over 2 days. Interesting. So entering on the 8th, a bull put at 540. Let me open that up for you. Okay, so on the 8th, I enter a trade which sits approximately here. And the 8th is that one. And I'm basically just bullish. And we did go up quite nicely here. And then just took profits. Very simple, actually. So essentially, bull put spread. Anywhere above here, we make money. This is sort of our classic trade that we do pretty much every other day. So the IWM trade then, overall we made money, but we didn't make money on that day, and I tell you why. I had a bearish trade that I set up here on the 8th. So on that day, I decided to set up a bearish trade that would make money. This is where we entered. This is the enter. I would make money if we dropped a little bit or stayed anywhere below this yellow line up there. This zone up there would be sad because I'd lose money. And then guess what? 2 days later, it's like, okay, it goes up. And then we gapped up the next day. And I was like, no. So I had to exit the trade. Okay, so overall, that wasn't good. So I exited somewhere here for a loss on that Russell trade because it just went against me. And I just It'd been consolidating for so long. I got a little bit into that too late. It wasn't really a clear signal. It was just a bit of a, yeah, it wasn't the greatest call. And that's okay. Sometimes you don't make the greatest calls all the time. And I also opened a Mara trade on that day, which we'll get to in a moment, which turned out to be quite a nice one. And I'll explain that in just a sec. On the 12th, made $120. Not getting rich that week, right? On an XLE trade. And that's the energy segment of the S&P 500. And what did I close here on the 12th? I closed, trade opened on the 5th. $93, $95 call option on the 5th. Let's just open that up. So I entered this trade here on the 5th. And the exit occurred on the 12th, which was here. Now, my trade was bearish. And what happened? Well, you can see I was rather happy and congratulating myself for the first couple of days. And then the market turned around and we closed at the top of the day here. We had another big, beautiful green day. And so it was enough. So I pulled the trigger and got out of that trade, which was a good exit call because we went up significantly higher and I would have then exited at a loss. So that was an okay setup. That was an okay setup. Following the rules is usually what makes money. Not a lot of money in that case, but a win is always not losing a lot of money, right? So that's a loss. That's a win. That's a win. And these little trades are all wins. Fast forward to the 16th, next week, IWM once again. And on the 16th, I closed out the 190 and 195 put. Okay. Which I set up on the 2nd of July. So get into the trade here and exit the trade there. Pretty sweet, right? Now, did I time the top of the market perfectly? Did I have any idea? No. It was just hitting profit targets. I think that's really what it's all about. So it's not like we have a crystal ball. It's just on that particular day. That was a very nice setup. We're lucky, sort of went nowhere, gapped up once, gapped up twice, gapped up a third time. Very, very nice to see. And it was just such a profit ride. I just thought, let's just get out of this. It's not that often you get 3 gaps in a row and then some. And that was in hindsight a good call because then after that we kind of went down a little bit, plateaued a bit here. So that was the rally. That's the consolidation. When you start consolidating, you want to get out of trades, especially with something where you're making that much money that quickly. On the 17th, Dell trade loses me $830 and wipes out my gains from the day before. No, what happened? So on the 8th, I enter this trade, 115, 130 put. So what happened here? Dell, I buy in here, basically, a bullish trade, hoping the market's going to go up. And it was a big green candle that day. It was very bullish. The next 2 days, not a lot happens. Consolidation happens. And then when we go down a little bit. And why am I not jumping out immediately? Because my break even is actually down here. That's my break even from my options trade if I hold it till death do us part. But then something happens that I don't like at all. And that was a gap down. And when you get gap downs, you get the heck out of trades because it's a bad stuff's about to happen. And that was a good call because look where we are right now. There was another gap down. There's another gap down. And we're just like, we would have lost a lot of money. So exited that just on prudency. The thought process at the time here was AI replacement cycle. We'd expect people to buy a lot more PCs. They haven't bought them since 2020 and so on. But, the market didn't care. Momentum overruled everything in these situations. Okay, and then it gets a bit more fun the next day on the 18th, and I take a lot of profits on the 18th. And that's probably a little bit inspired by the Dell trade because I had a strong expectation that these kind of PC companies would make a lot of money and sell a heck of a lot more. And I also had 2 crypto trades open. One is Coinbase. Okay, so here's the Coinbase trade, which I entered here on that blue line there. That's where my buy was. And that was simply a long call option, if I'm not mistaken. Yeah, that was a call option going into 2026. And what was the theory here there? Okay, so we had gap up and then the exhaustion, the sell-off. And then we find our feet here. We find them again here and actually rally up quite nicely on that day. So that's when I enter. And then even though we dwindle a little bit, we get that gap up, the rally happens, and where do I get out? I exit here. Why do I exit? It was a pretty bad red candle that day. And even though we went a little higher, that sort of said to me, okay, maybe the party is over. I mean, I look at volume as well. Volume was declining every day that we were climbing up here, which is a bit of an early warning sign. So very happy with those profits, and probably also slightly shell-shocked from the Dell trade that went the wrong way, and therefore thinking, let's just count our chickens right here, right now. Now, the second trade I closed that day was that Mara trade, which I entered at the same time here on the 11th. That's when I basically bought a call option, a long call option, and as luck would have it, we went up, gapped up 2 days later, went up very nicely, and and then exited on the 18th, which was up here. And you'd experienced a top, slightly higher top, but then gapping, moving down quite a bit, and then a lower high. So a lower high, a lower low, that's bad news. Volume is suddenly declining. So I'm out. I'm taking my money. And that was, again, it was a very good call because you can see what happened afterwards, which of course I didn't know at the time. So that was a good trading day here, realizing $5,300 on that trade alone, and another $2,400 on the Coinbase trade. So pretty good setup. Now, some people are going to write in comments, Felix, but those are not the beginner trades you teach. Well, you have to master the beginner trades. If you're not profitable and consistent trading SPY, don't start messing around with crypto trades, because you're just going to lose your shirt. So you have to build the foundation. Once you build the foundation, you can put the fancy extensions on top. On this day here, SPY trade and an XLE trade. Let's have a look at those. Here's the SPY trade. We closed on the 18th? 19th even. Okay, so on the 18th, I'm bullish SPY. Okay, this is a trade I did during a live trading session for a webinar we did, because I wanted to be able to show you some real trades. That's why I set that up. I wouldn't otherwise have set up a trade there after that big red candle. And that's also why I got out of it very, very quickly. So not really a lot to learn from that setup, I would say. And similarly, hang on, let's have a look at XLE. That's probably a little bit more interesting. 88, 85. Okay, here's that energy trade. So I entered the trade here. Now, when I enter trades, I have my break even was down here. That yellow line there is my break even, which means I can stay in the trade a little bit longer when it starts to come down. Yeah, it sort of doesn't look good, but it did actually recover. So we bottomed out here, higher low than the previous low, which is kind of bullish. And then we recovered very nicely. And then the day after we top out, we get a lower high and I exit. So nice setup overall, really, making a little bit of money. It was a small trade, $240. Nothing enormous there. And then I think the last interesting trade really of the month is that VIX trade here, which is possibly one I slightly regret, even though it made money. And let me explain to you why. And I say the regret thing with a bit of a smile, like we never really regret things. But on the 26th of June, here, I decide to buy a call option on the VIX that would expire after the general election, because typically volatility goes up going into an election, which turned to be quite a good call. And why do I say I regret this? We made money on the trade because I exited that trade a month later on the 24th of July, just being greedy and wanting to lock in profits because I like locking in profits. So I closed my position here and I made money. But if I'd held on to this up here, you know what would have happened, right? I would have been incredibly stressed trying to close out that trade on that Monday. But the trade would have made, hang on, where was my, this is an approximation. I was down here somewhere, $14. So if I'd held on till up here, I would have made probably an extra 100% or something like that. not too bad, maybe even 200%. But anyway, we made money. That's all that matters. Try not to look back because it's generally a bad idea. And that's the month. And you know, we continue to do these things. We continue to deliver month after month after month, and we aim to do the same thing again in July. Maybe not quite as big a figure. I don't really aim for that kind of thing. I actually don't have a profit goal for the month. I never do, because there are periods where you do a lot. There are periods where you do very little, and it just comes the way the market offers those ideas to you on a platter. And I appreciate, for somebody who's new to this video might not be that useful, but I just want to show you what's possible. And if it just opens your mind to something that you might go, okay, maybe I want to learn a bit more about this, come and join my free live trading beginner challenge this week, Tuesday, Wednesday, at felixprehn.org/challenge. And I'll break down to you actually the rules that you would need to automate this and start as a beginner and so on. And I hope this is somewhat helpful to you. Share it with a friend, smash the you-know-what, and I hope to see you on the next one. Felix here. If you're worried about how far this market's going to crash and what's going to happen to your favorite tech stocks next week, then this is the video for you. We're going to run through Nvidia, the S&P, the Nasdaq, Palantir, Apple, Tesla, Microsoft, Neo, Alphabet, Amazon, Meta, PayPal, SoFi, maybe one or two other names we can think of along the way.